Let's head to the equities market now. The Nigerian market breadth closed negative as the market capitalization lost 6 billion on Wednesday, 19th July. On Wednesday, there was a slight decline in the Nigerian Stock Exchange, with all-share index decreasing by 0.01% and closing at 63,757.23 points. Additionally, the market capitalization experienced a drop dropping to 34.71 trillion on the same day. However, the total value of shares traded stood at 10.08 billion. Sharp decline from the 42.81 billion recorded on Tuesday. Also, the market experienced a sharp decline in trading volume of 45.5%, falling to 473.49 million units of shares. So there you have it, a quick snapshot of Wednesday's activities. But let's take a look at the top gainers for the day. You have Honey, Floor, Tana Oil Academy, Sky Aviation, Naruti, Briscoe, all gaining almost 10% at the close of the day. But if you take a look at the top 5 gainers now, Gerigo Power went down, losing about 35 kobo at the end of the day, followed by Prestige and followed by FTN Coco losing and 22 kobo. Linkage Assurance lost 7 kobo, while Jais Bank lost about almost 10% to close at 101 kobo. That's of course a quick glance at what went down in the market yesterday. Okay, let's get talking now. Christian Isaac Anyalisi, a stockbroker and investment analyst, he joins us now virtually to look at the current negative sentiment in the market. Thank you for joining us, Mr. Anyalisi. We appreciate you for coming on board. Talk to us about Wednesday's trading section on the sentiment that play out. What would you attribute that negative sentiment to, looking at the marginal decline?
It's all right. We don't expect a market that will continue to be on the upward horizon in terms of share price increases indefinitely. It doesn't happen. No matter how good the economy is, there will always be time for profit taking. There will be times for portfolio managers, and there will be times to reflect on economic realities, and all of that have a way of playing, affecting the market, because the market is information driven traditionally. If you recall that on July 17th there was the bond auction, okay, which worked in 656.74 billion, as it were. Was subscribed by 162.54%. You will suspect that there must have been some movements of funds from the equity segment of the capital market to the debt segment of the capital market, because once you have a situation where the debt market is doing well, is robust, it definitely also means that to some extent the capital market will be shedding weight at the same time, because they work in opposite directions. So that is one factor you have to look at. Another factor you have to look at is the fact that a lot of equities have also gained in prices, and that speculators will definitely want to take profit. We also have to look at the fact that certain attenuating circumstances have not played out very, very well. You have a situation where the president is yet to announce the ministers, and that will definitely have its own downturn implications on the functionality of the economy, as it were. You also have in a period where you're expecting that interim results will half-year results will begin to come in, and interim dividend will begin to come in. So all of that will have a role to play on what the figures that played out in the market with respect to the all share price index shading 0.01% to close at 63 757.23, and market capitalization coming down to 34.72 trillion on the year-to-date gain of 24.37%, while the oil share index gained 24.40%. So these are some of the dynamics that we have seen play out.
Let's look at the inflation rate figure in the market. Do you think the market is reacting to that? And if it's reacting to that, how are investors positioning? Because it will seem that the inflation that is going up will require that they have to put their fund where it can be well protected or hedge against inflation.
Yeah, with respect to Monday trading and even Tuesday trading, I would think that due to the sensitivity of the capital market, of the equities market, that investors and portfolio managers are already pricing in an upward adjustment, because you see there are certain things playing out here. Banks have a strong currency and at the same time have a reduced interest rate. So having devalued the currency, it is reasonable to expect that domestic interest rate will have to move up. So with respect to the forthcoming Monetary Policy Committee meeting, we expect that there's definitely going to be an adjustment of the interest rate to about 18.75 or definitely 19%. So that's the picture. I don't see a situation where the interest rate or the MPC will be dropping the monetary policy rate given the economic realities as it is. Because if you do that, it will be difficult to attract the much needed foreign direct investment, given the scenario that we have already devalued the naira. So you need an uptick in the interest rate to be able to attract foreign direct investment. So that's the position.
Okay, but how is the market reacting to or responding to the increase in the fuel price from around 400 or 500 initially to around 617 naira in some places now?
Talking about market reactions to that, I think the parameter for that measurement will be for us to look at the responsiveness of investors to demand for equities in the oil subsector. This is how I want to gauge that reaction. You just told us here, you reported that Eternal Oil was one of the price gainers, in that sector. That tells you that there is increase in confidence, of investor confidence with respect to those companies that are listed within the oil and gas sector. The reason being that it's expected that with the level of subsidy, that they will be doing more businesses. Petroleum marketers will do more businesses, and that will rub off positively on their bottom line. So that is just another way of looking at that. If by way of benchmark, if you look at what happened to Honeywell gaining 10% on the previous trading day when the announcement of their victory over Ecobank with respect to that 72.2 billion debt issue. You understand? So that's the way the market operates. You understand? When there are information that are positive, towards a particular sector, towards a particular equity or company, then you see investors' interest, in those very equities or in that very company.
Okay, let's wrap it up with this now. So how is the market likely to end today? I don't know if you've seen the movement in the market today, but what are your expectations, your outlook for today, and of course for the rest of the week?
Well, we expect that within this week we will continue to see mixed sentiment. We expect sustained mixed sentiment.